Hello everyone, welcome to Rainbow Tools company preview. Summer is coming, so let's talk about the company which is in the hotel and travel business. The company IPO'd in 2007, has a market cap around 2.1 billion Polish zloty, which is about 500 million euro. It's a member of the Polish midcaps MWIG 40. The company in the long term had a spectacular performance and grew over 2000%, which gives over 17% CAGR. Before we jump in, I want to give kudos to Biznesradar.pl and portalanalyz.pl, which both are used for preparing this video. This is not a paid promotion, I just want to recognize valuable sources of information about the Warsaw Stock Exchange. For complete transparency, I just want to remind you that this is just a company and a business preview with my interpretations of their business. It has my opinions. I also do hold the Rainbow shares. I am absolutely not recommending to buy or sell the stock. Also, this presentation may have mistakes, even though I spent a lot of time to make sure everything is factually correct. Also, I am not a Rainbow Tools customer because personally I organize my free time by myself and I prefer basically different type of activities. Rainbow Tools is in the top 4 tour operators in Poland together with Ithaca, TUI and Coral Travel. Besides that, of course, there's a lot of other smaller players in this travel business. When getting into a Rainbow company, it's good to start with their structure and subsidiaries to understand what they are doing. On the screen, you're seeing the companies which they fully or partially control. Let's start with MyWay by Rainbow Tools. They concentrate on organizing and providing training for travel couriers, leisure time animators, and holiday representatives. All of this is under the Rainbow Academy project, which has their own academiarainbow.pl website. Next one is Tours Destination Services Turkey Tourism. They provide directly additional services sold to customers of Rainbow Tours and also optional trips, also to other market entities. This is a very good example of the vertical business optimization, in this example in Turkey, which is of course a big travel destination. Also, they have established sales in Czech Republic and they have a company which deals with that. The two most interesting ones is White Olive. This is the owner of hotel properties in Greece and provide hotel services for Rainbow Tours, but also for other tour operators. This is not just a vertical optimization, it's a source of higher margin income, and for me it also shows that the company is able to do successful acquisition and grow beyond their core business. And finally, the acquisition which they made in 2025, which made a horizontal expansion into Romania. So PARALELA 45 Tourism, this is a tour operator offering a wide range of tourist services. Romania overall is a very opportunistic country with a high potential, so this acquisition is definitely the one to be watched closely. Also, Rainbow Tools, which we will learn in a second, has a limited possibility to grow organically in Poland. So this is great that they are looking beyond what they are just doing by default. From my perspective, right now, Rainbow is in the two main businesses. The tour operator business and the hotel operator business, which are different, but they are complementary to each other. So you have the network effect you want to see when the business expands. This is important because for sure you want to avoid diversification of the whole business described by Peter Lynch. By the way, I strongly recommend his book. Let's start with the tour operator business, which is their core business and drags the company into the fight for margins because it's basically a commodity. So they will book a plane for you, take you to the destination, organize hotel, food, offer extra day trips or other attractions. Boring. But making this business run really well is what it makes it interesting. So you need to execute perfectly and you need to have efficient sales, especially direct and e-commerce as much as you can. Then you need to have effective marketing. You need to identify and grab the vertical integration opportunities, including insurance, extra trip, extra attractions, have own parkings at the places where you go often. And of course, you need to see if you can do something about the aviation efficiency. Also, you can think about avoiding commoditization and you can try to specialize, but then the question is, what about the scale? And do you have different risks thanks to that? And how much you can differentiate? So basically, the good thing is that they really look at those vertical integration opportunities and they take those opportunities when they have a lot of customers. So Greece, Spain, Turkey, they mentioned Italy in the recent investor call. So this is looking really good. And I think despite this being a commodity, they run this business really, really well. The different story is their hotels business. It's awesome because it has way higher margins, it has a lot to do with the real estate business, and it has higher barriers to entry, which creates a bit of moat for this company. Like the hotels in Greece. Even the simplest barrier is the amount of capital needed to buy a hotel. But also, how do you know how to buy the right one? How do you find real opportunities on the local real estate market and how to deal with the local regulations? Finally, how do you run and utilize these hotels well across the whole year? Of course, Rainbow has an additional advantage here because they know tourism, so they can better identify the right properties. They have a local company that deals with a lot of those issues. And finally, they do make quite a bit of money, so they can continue to reinvest without even taking a debt. In addition, in November 2025, during the investor call, they said hotels are usually few years old or recently renovated. The link referencing this fact is in the description. So with all of that, I'm looking at the company as the one having two core businesses now, each complementary, and this is what I like to see. It's not just buying left and right because we have limited organic growth possibilities, so let's just buy something and let's just use the money we can spend. So from my perspective, the way they are making acquisitions and structuring their business is great, but what about the headwinds and tailwinds? Let's start with the headwinds and risks and what goes against the company in general. One is the currency weakness. The local Polish zloty and Romanian lei strength has multiple dimensions. The key one is the fact that the majority of customers are Polish and now also Romanian. Then, very strong euro and dollar will impact the overall consumer buying power. But, of course, company also pays for many things in euros and dollars and reports results in Polish zloty. Also, of course, you have a fuel costs, which is a major factor for aviation. Then these issues may go together with the geopolitical instability, and you may have a triple risk combo materializing at once. And it's actually typical that the local currencies weaken during the uncertain times, and this combines with the high fuel costs. Unfortunately, these risks are materializing right now. Of course, it's very bad, but I don't want to go into geopolitical analysis. However, with the situation like we're having in Iran right now, it's important that we stay optimistic. And when we analyze the business, we need to focus on the business and price the risks accordingly rather than guessing what and when something will happen on the global level. Also, the company showed a lot of resilience in the past difficult times, and they do hedge for the uncertain times. On the positive note, when all these risks retract, then they may turn into the extremely strong tailwind, and we had a chance to observe that in 2023 and 2024 when the currency strengthened, inflation went down, situation stabilized, consumer buying power were increasing, and with all of that, oil prices were low. Also, this can be looked as like, I'm bullish on the Polish economy, so probably this will go rather in favor of the company rather than against. If you think that small countries like Poland or Romania are not going to be successful, then it's definitely a different story and different ways to think about it. In addition, of course, we cannot ignore the competition because, of course, it's very active and weather may cause issues, like the fires in the southern Europe. However, also the company is, from my perspective, quite elastic and agile, so they adapt to the situation that is happening. From a financial perspective, the management was also very clear that the PARALELA acquisition will have small, they mentioned it's about a few million at most, but up to 2 years negative impact on their earnings. And in general, they expect the company become profitable in 2028. So this headwind will turn into a tailwind. Okay, but what about the opportunities? First is, of course, hotels. I'm very bullish about this business, about what the management is doing, and finally the numbers look really, really nice in their reports. And there seems still to be growth area in the Greek hotels business. At the same time, the CEO was clear that they can't easily replicate this model, for example, in Spain, as the hotels in Greece are still privately and family owned to a large degree. However, in general, I think there is still a lot to do in this area in Greece itself. Of course, the scale of operation gives them a chance to optimize and perform more vertical integrations. They are also focusing on direct sales and e-commerce sales, which gives them better margins. Overall, the tourism market and the amount of people who want to go on organized holidays is growing, and the consumer is now looking not just to buy goods like in the past, but also looking for services, experiences, and leisure. In the longer run, the consumer's trend is increasing, so all those trends play in favor for the company like Rainbow. Another area of positive developments is winter tourism, as people tend to take more than just one holidays currently in the year, And this combines nicely with a lot of Asian destinations becoming very popular. For the longer run, the PARALELA acquisition should help the company. We're talking about 2028 and beyond that. And also what I understood from their CEO, they are interested in making more acquisitions, but not planning one anytime soon. And they are seeking for more new ways to optimize, like buying airplanes or things like that. Now let's summarize the opportunities as the growth drivers. I want to start with the fact that the CEO is clearly saying that they focus on profitable growth. Also in 2025, he was saying that the company will not have rapid growth rates like it had in 2023 or 2024. But this doesn't necessarily mean that the business is deteriorating. And from my perspective, it basically means it is evolving, especially when we're looking at the recent acquisitions. Breaking this down, we have a nice growth for the hotel business, which was contributing roughly only around 2.3% of the revenue in 2024, but it contributed already 9% to the bottom line, which clearly shows how profitable this business can be. Then we have international expansion, which really means PARALELA 45 at the moment. And during the calls, they mentioned they want to be profitable with this business in 2028 and overall want to grow this business 2x to 3x in the next 5 years. But keep in mind that the CEO tends to provide very modest and conservative guidance and forward-looking statements. Finally, we have organic growth, which could get up to around 8%. That's what CEO is saying. But he is also saying that basically this organic growth should be in line with the market. As I mentioned before, inside this organic growth, we have some positive trends like Asian popularity and the winter season growth. In general, my expectation is that the company will grow 7 to 12% top line in the upcoming years. It is a possibility that they will report in the upper range of this guidance soon, but I think projecting for the longer term should be more conservative, especially if we want to properly account for geopolitical risks that will have material impact on the consumer, travel destinations, and places where they can reasonably operate. Of course, to properly analyze the company, it's good to have reports. And I'm sure you absolutely can't wait to read those. The good news is that Rainbow provides great reports, and there are not just numbers, but a very descriptive details and descriptions about risks and details of operations. And I especially recommend the ones provided in May and November. By default, the reports are in Polish, but these days it is usually not an issue to translate a PDF. Some reports are provided in English after clicking the EN button, but keep in mind that not everything is available in English. Links, of course, are in the description. Additional benefit for the Rainbow Tours is that it is a friendly company for the individual investors, and it's easy to get nice insight into a company thanks to the webinars they do twice a year. When they summarize the peak summer season in November, then it's a Q3 webinar, and they summarize the winter season in May, which then it's a Q1 webinar. Huge kudos to Strefa Inwestorów who organized the webinars on YouTube. of course, links to Strefa Inwestorów and streams with Rainbow Tours CEO and CFO are in the description. Okay, and since you know the key dates and events causing peaks in the lower season, now let's take a look at what a tour operator does as a base case. So they basically renting a hotel rooms as a pre-booking contracts for the whole season for a certain number of rooms. This, of course, means better prices. And the contracts are usually 18 to 23 weeks contracts, typically May to September or June to October. Of course, they are also adjusting airline operations to this. And now we can answer why so volatile Q2, especially in the oversupply conditions. So the answer is that it is because supply is inflexible. It's pretty much pre-booked and defined, where the demand varies, especially in the oversupply situation like we had in 2025, which was caused by the lagging effect of the huge tour operator growth in 2023 and 2024, which was caused by extremely favorable set of macro conditions and extremely low post-COVID base, combined with the growing Polish consumer strength. Of course, the oversupply situation is especially visible in the last minute and price-sensitive customer base, which is actually a large customer pool in May and June, so the two key months of the volatile quarter. So, with all of that, you need to see how the Q3 will go, so you don't draw wrong conclusions about how the whole year is going and how it can end up. And this is an example of the important detail that the management is willing to explain to you during the webinar. The other highlights you can learn are how the tourist market looks like overall, how the winter season is improving, how they are expanding airports coverage amongst the major cities in Poland, how Asian market is doing, and Thailand being the top destination, including the details like flying 5 times a week with 1,000 customers a week for Thailand only. Also, they are providing some sort of unofficial guidance if you listen carefully. Now a newsflash, which I hope will help you track what's going on in the short term. You can look at the news from Enter Air, for example, which is also a public company listed on the Warsaw Stock Exchange, and Rainbow Tours is their customer. In this article, we can learn about the deal and the fact that it's 17% higher, which can give you some idea for the future demand. By the way, Stockwatch is also a good source of information about the Polish stock market and the companies. From the other article, you can learn how they are expanding their local direct sales, and this is also important as many customers want pleasant and direct experience and consulting being available when booking holidays. CEO mentioned that some of their customers look at the offer online but then go to consult and book it in person. E-commerce channel is in a very good shape, but people want some direct interaction. That's maybe not optimal for the business and the margins, but at least it's a good sign from a future of humanity perspective. I'm also adding an additional interview with the CEO Maciej Szczechura. It's in Polish, but also gives good recent insights into the company. To be clear, this is pre-Iran war, so I will look forward if or how the company comments the situation, and also they are reporting monthly on pre-bookings, so it's good to observe, especially if you'd like to go deep into a company and have at least a monthly updates on the business. Before we jump to the valuation topic, let's look at the geopolitical risks from the travel destination perspective. Here we have a catalog for the winter season 2025-2026, and we are seeing destinations like Mexico, which had issues recently. Then we had Venezuela, and finally Cuba, which is not discussed much in the news, but the island looks very much blocked with almost no oil, dramatic electricity situation, and overall the problems seem to be piling up quite quickly. Now, going to the other part of the globe, we have the Middle East like Jordan, Oman, and Emirates, which we can clearly consider as affected by a war. Then we have additional risks in Turkey and Cyprus, and overall I hope the war does not escalate, and what happened so far will be more like an accident in those countries. But still, even if things don't escalate, the prudent customer will simply avoid going to the region, cancel or refrain from booking a trip, and yeah, this is enough to impact the business. Additionally, as Eastern Asia becomes popular, and if the whole Middle East will turn into a chaos, and obviously you cannot fly over to Russia, it may be simply hard and expensive to go to East Asia from Europe. Now, jumping to the current catalog, we're seeing a large offer from the Middle East, and right now I don't see any of those could take place. So even if situations stabilize a bit, there will be some time required for people to regain confidence and feel safe to travel into the region. And I think it will take significant amount of time, and basically this year can be kind of lost. The only good part of this is that still there is quite some time, so maybe the company will manage to basically change the offer or do some sort of mitigation plan for that situation. For this company like Rainbow Tours, they deal with those issues frequently. It's not new for them, but definitely it's not good to anybody. Okay, now it's everyone's favorite valuation time. I'll present two concepts, and I'm not trying to tell you or convince you what is a good price or what is a bad price. My goal is to demonstrate a process, based assumptions, and the math behind it. Also, I'm trying to share that valuation process doesn't need to be extremely sophisticated, as we must operate on assumptions, confidence levels, and probabilities. So making the process extremely complicated may create confusion rather than clarity. And on the flip side, the simpler process allows you to validate and challenge your assumptions way more easier. Remember also that buying a company for a successful investment requires your own conviction. As a minimum data needed for conscious valuation, you need the last Q1 and Q3 reports, and I'm showing you by far the coolest tables with the numbers in these reports. But of course, there is a lot of great data in these documents, so make sure you check them out. In addition, it's good to watch recent interviews and the last two webinars, and also you can help yourself with the business radar, with the financials, margins, and historical valuation ratios. In the premium version, you can also look at the analyst's estimates, but I do not recommend to do that before making your own valuation, because you may become biased, and also it is someone else's opinion, and it's also an average of opinions. So I don't know how you can expect above average returns if your strategy is based on average of opinion. Overall, I'm bullish on Poland, and as a poll, there is a non-zero chance I'm slightly biased, but part of my investment is in the small and mid-cap ETFs for Poland because I don't have enough time to analyze all the companies deeply enough. Remark: I know on Monday, March 9th, or at the time when you are watching this video, the market might go into a severe correction and the Polish stock market, as an emerging one, will get very volatile. But valuation is not a geopolitical prediction exercise, and it's important to distinguish that. Also, if you are not optimistic about the future, then I don't know how you can invest at all. So let's take a look at this exercise number 1. It's a DCF style, but with the focus on net income. Rainbow pays also nice dividends with the policy to pay around 50% of net income as a dividend. I didn't include it explicitly at all, but I provided EPS and dividend numbers for the reference. The concept here is very simple. I started with the annual revenue estimate and the margin estimate that will be reported soon, and then I was making various growth and margin estimates. And the base case is the 10% growth in 2027, so when they will report results for the whole 2026. And then it's just a 7% growth. The base case is obviously not assuming a geopolitical disaster, and I think that's fair, especially for the upcoming season, because hedging should do the job and there are plenty attractive and safe places to go. So projecting margins is kind of tricky, but in the base scenario, they should hold. There will be a pressure on the base tour operator business, and PARALELA 45 will be lowering the net margins. But at the same time, I'm expecting growth in the white olive hotel business and continuous extended positive impact on the bottom line. I also think that Mr. Szczechura with the team will remain clever and they will come up with more vertical improvements. Note that I'm applying 12% discount rate, which I think it's appropriate to increase and move it up from the typical 10% used by most of the people. In general, I do prefer to increase the discount rate, which I treat as my expected rate of return. Finally, the PE of 8 is quite low for a company growing even double digits, but at the same time, it's a still low margin business with a lot of risks, so I do not expect a multiple expansion here, and I think it's prudent to keep it at 8, or maybe you can even try lower. With these assumptions, we are getting the value of 132 per share. Of course, looking 3 years ahead may be considered a short term, but of course, this projection can be developed further. With this Excel, I can now easily change values marked in this weird color, which I can't name without referring to fruits like peach or apricots. Of course, you can also use AI, state your assumptions, provide starting values, and even with the latest free models from Gemini or ChatGPT, you'll get a good conversation with similar results. Now let's jump to the second example, which is mature margin framework exercise, which I basically took and adopted from Drew Cohen, who is providing awesome analytical materials on the US companies. In this case, I'm looking at the expected revenue for 2028. Then I apply a bit the margin and a tax rate to get the net income. And then I can easily try various buy prices to see how much upside they can give me. Here, it's clear that the prices like 145 or 160 don't provide upside, and the opportunity is for sure below 130. Note that here the tax rate in Poland can be tricky, and for a truly conservative estimate, you may want to set this value to 30%, which then in turn will mean that the margins are actually lower than the ones from the previous exercise. And the opportunity should be looked around 120. Of course, you can modify the values and play around a bit, but it's important that you don't enter the values which will give you the results you would want right now. Finally, valuations may help you to move away from a recency biases and other emotions. And a great example of that was a re-evaluation of the SaaS companies, where a 25% correction for some people was already considered an opportunity, but in many cases it was just a move or correction bringing prices closer to a fair value. And a prudent investor would need another 15% drop to consider an opportunistic buy based on the attractive valuation. So keep calm and run valuations, and see you in the another video.